Ladies and gentlemen, on behalf of Kaptify Consulting Investor Relations team, I welcome you all to the Q4 and FY26 Post Earnings Conference Call of Menon Bearings Ltd. Today on the call from the management team we have with us Mr. Arun Aradhya, Managing Director, Mr. Aditya Menon, part of the promoter group, and Mr. Anshul Menon, again part of the promoter group. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the period ended March 2026, their growth plan and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Hello everybody, good afternoon. Thank you for joining us to discuss Menon Bearings Ltd audited financial results for the quarter and full year ended 31st March 2026. This has been a landmark year for the company. We have achieved significant growth across all key financial metrics, reflecting our strong position in auto component segment. So total income growth, our consolidated total income for 25-26 reached 300 plus crores, a robust 23.16% increase over the previous year. So far as profitability is concerned, our PAT for the full year stands at rupees 38.25 crores, representing a growth of 53.41%, which is really phenomenal. So far as quarterly performance is concerned, the fourth quarter was particularly too strong. On a consolidated basis, our PAT for quarter 4 25-26 was up by a remarkable 108.55% over last year, that is year on year. So earning per share has also gone up from 4.45 to rupees 6.83 per share. Now coming to operational excellence and strategic updates. So we have the performance overall was driven by increased operational efficiencies and a focused approach to market expansion. We continue to operate within our primary segment of auto components where we are seeing sustained demand. Now, as a legal compliance, so the new labor code has been introduced by the government and the regulations have been issued in the month of April 25. However, we have taken proactive measures to see that the impact of the same is already taken care of and has been accounted for in the previous year. So there is no further liability in this regard will be arising for the past years. That care has been already taken so far as gratuity and basic and bonus and all components are concerned, that has been already taken care of. So asset management is concerned, you see our total assets stands at 267 crores. So the asset turn is almost 1.5. So far as bearing is concerned, asset turn is 2. Alcop it is 1.5 and brakes it is almost 1, which is likely to be are targeting about 2 in the next year, or including this year. Looking ahead at 26-27, we are extremely optimistic. Our new development parts pipeline is robust, with 51 new parts across major customers like John Deere for India domestic and exports as well. Eaton, Taco, Prestolite and Mayakawa representing a business value of almost 30 crores of rupees within this year and next year. Most of the items are under development. Some of them have been already approved by the customer. Some are in the commercial discussions. With this, apart from this, in bimetal division also, we are having a robust pipeline of more than 50 crores of rupees, and that for the brakes, it is almost 10 crores of rupees for the next 2 years. With this, we hope that there will be a question in your mind that whether we can sustain the performance that we have given in the last quarter. I am 100% sure with the business in pipeline and so many actions that we have taken in the past so far as material consumption in raw material prices are going up. we were successful in passing on that burden of raw material to the customers to the larger extent. Maybe one or two customers are left, and that will be completed during this quarter also. And again, we'll be sustaining this because of increase in the overall turnover, which we are targeting at a rate of 25% year on year for next 2 years, and you can calculate as to which volumes we can reach by 2028. To be optimistic, we have in our mind estimate, which depends upon the overall geopolitical situation and all these things. We should consider that, but we are very optimistic to see that, and we will take all out efforts to see how we can reach 500 crores by 28. So there are several other customers, and in conclusion, Menon Bearing is entering in the new financial year with strong momentum and healthy order book and a solid financial foundation. I again assure you that considering the present situation, going forward, we will be able to maintain EBITDA more than 20%, and it should be about between 20 to 22% during next 2 years. We remain committed to delivering sustainable value to our shareholders. Now, we will now open the floor for questions. Thank you very much.
Thank you, sir. We'll now begin the question and answer session. All those who wish to ask a question, please use the option of raise hand, and we will invite you to ask a question. You can also put your question in the chat box or in Q&A box. We'll take the first question from Agastya Dave. Please go ahead.
Am I audible?
Yes,
Yeah,
Thank you very much, sir. Sir, congratulations on amazing performance, sir. Very, very well done, sir. And also, I would like to thank you for starting the con calls and appointing an IR agency, sir, putting up the presentations. It's very, very useful, sir. I really appreciate it. I've been tracking your company for more than 10 years. And I was a shareholder long, long time back. And again, I'm a shareholder again. So even in that time, you guys did very well, sir. Even now, you're doing very well. So congratulations, sir. So one request, in the quarterly numbers which have come out, they don't quite tally with the format in the annual report. There are slight changes, reclassifications, especially in the employee expenses and the other expenses. It's difficult to tally if the two formats are very different. So I would request, sir, for 2026 annual report and the subsequent quarters, if we can stick with one particular format, which is consistent across annual reports and also in the quarterly results, so that we can tally individual line items. That would be of great help, sir. Sir,
I know what is your observation, that I have also observed, and we have given a particular note in the presentation that has been submitted on website as well as uploaded on the BSc, NSC websites also. We have given a precise note as to why there is a change. Last year, the tooling cost, so far as tooling manufacturing is concerned, was shown under operating expenses. Now it has been shown under actually raw material consumption, and that's why there is a difference, and that note has been already given. So
sir,
we will see that.
Apart from that, there is one on employees also.
So this is that goes on varying. So that we will be giving details in the AGM.
Okay. Perfect, sir. Perfect. It's a small thing, sir. I just wanted to make sure that I put that point across. Sir, given the new segments that you're working on and what has been written in the presentation about the new components that you're developing and the trials which are happening, after that, sir, how do you see the margin profile of the company changing? So one is the operating leverage which will come in because you are growing volumes. Second is the mix change that you are undergoing. So how do you see the margin, the gross margins and the EBITDA margins changing, sir?
You see, so far as new developments are concerned, more than 50% of the new business in pipeline is exports.
Okay.
That is for exports, where margins are always better than aftermarket or OEM. So considering that, we are 100% sure that we will not be only able to sustain the margins, but the margins will further improve.
So this will be like 50 basis points every year, or will there be a bigger jump because the other divisions will now start contributing quite meaningfully, right?
You see, it depends upon exactly how at what time the business starts. So far
Right,
as exports are concerned, because you see, we have already explained in so many meetings that once we received an inquiry, the total time for testing, validation, preparation of samples, submission, and actual production, it takes lot of time. That is between 6 months to 1 year. So
right.
depending upon when the business of export starts, it is productionized. Depending upon that 15 basis point or even more than that, we can definitely, and I am sure that it goes above 15 in the next year.
Great, sir. Sir, what is the planned capex for the coming year?
Planned capex for Menon Bearing, it is bearing division, it is bimetal division, 25 crores for next 2 years.
Okay.
And for Alcop, it is 7 crores, and brakes, it is 3 crores.
So 25 crores each for 2 years for bimetal.
For 2 years.
Combined together 2 years.
So 12 and a half, 12 and a half, and then 7.
They
And then
maybe 20 plus 5, but it taken together it is 25 for 2 years.
and sir, for the brake division?
Brake division, it is 3 crores.
3 crores. Okay, perfect. One final question, sir. The one thing which is sticking out is the high interest expenses. Is there a particular reason for that, sir? Is there a way to control that? Any commentary on that part would be of great help.
You see, since we have started the business and our exports have gone up, particularly in USA, the total turnaround time of debtors is more than 180 days, and the exports have increased substantially.
Right.
So, increase in export is more than 3 crores. And if the turnover time of 180 days is
Right.
there, so obviously the debtors you can see from the balance sheet
Yeah,
also,
debtors have also.
has
Yeah.
gone up, and it is
Right.
obvious. But at the
Right.
same time, what we have done, since the interest subvention on exports is available by the government, they have made it available on our request, particularly on our company's request. Honorable Prime Minister has considered that, our Ministry of Commerce have considered, and they are now offering 2.75% subvention on export subsidy. Okay. So
Right.
we are going with PCFC limits, and we already talked, we have taken 6 crores of loan from the bank so far as PCFC is concerned, which is available at the rate of 4% now, 4.70%.
Right.
So over a period of time, when the total limits we are availing from the bankers is to the tune of 25 crores so far as PCFC limits are concerned, so that the total cost at the rate of 4.70% instead of 8%, blocking will be higher because of debtors. So we
Right.
can bring down that total working capital limit, and at the same time we'll be saving about 4% on working capital limit, so that interest part of it will come down, and whatever capex that we are going to do, that most of it will be financed with internal accruals.
Great, sir. Sir, I have other questions as well, but I'll go back in the queue and come back again. Thank you very much, sir.
Thank you.
Thank you. All those who wish to ask a question, please use the option of raise hand. We'll take the next question from Garvit Goel. Please go ahead.
Hi, am I audible?
Yes, Garvit.
Hi, thanks for the opportunity. I'm a bit new to the company, so just trying to understand what kind of new products are we currently working on? What are the sectors that they cater to?
So primarily our main customers are in the tractor, HCV, LCV division, then generators, earth moving. In the recent 3 years, we've moved towards little bit EV. We're making parts for, we are like tier 2 supplier for Tesla through concentric pumps. We give parts to Eaton Transmission. They do parts for Porsche e-mobility. We also started supplying to Taco Prestolite, Tata Motors for the electric cars. So we shifted little towards EV. We entered new products like Mr. Arade said. We've entered into the friction material. So we're doing HCV, LCV, two-wheelers now. Now we have entered new products into three-wheelers. we're exploring a railway. So from August or like by end of this year, railway business would have been started. In aluminium, we are diversifying into oil and gas, house automation. The product, there's a different area of products which we are doing now.
You mentioned about EV. What percentage of your revenue right now is coming from EV, sir?
So aluminium division around 10% is coming from EV.
Okay. And are we planning to enter into apart from the automotive sector, like the ones railway you mentioned, but again it is into the mobility part of it, right? So do we have any plan to enter into precision manufacturing for aerospace or something like that? Do we have any kind of adjacent capabilities in that area, sir?
We are doing high-end technology. We can do aerospace parts. We have also entered aerospace. We're doing some parts for Honeywell for airport and aerospace solutions, but we have not entered it largely yet. But our company capability is there to do aerospace, and we are exploring options. But we are doing few parts for aerospace also.
Our capability is into entering into aerospace, but what we are concentrating, as in the initial discussion and in the speech, I told you that we are concentrating more on auto components, where auto components focus industry and manufacturers.
Understood. And so what kind of demand scenario are we seeing in particularly in US market right now from the CV side of it?
So far as USA market is concerned, our exports have gone up by almost 50% over last year so far as USA market is concerned, and there is a lot of opportunities we are looking for. Apart from USA, we are targeting now European countries as well, since European countries are looking to divert their volumes and businesses from China to India, and they are tapping our doors, and we will be very happy to see that they come into our fold from the next year.
And as Menon Bearings has a good brand name, we are doing high value parts for the last 30 years. As like Mr. Aradhya said, as Europe is looking for new vendors, new suppliers in India. Touch wood, last 6 months we have got so many inquiries. We are getting overwhelmed by so much RFQs that are coming towards us. So Europe business also will start in the future. Today, out of the whole pie chart, we are doing around 35%. Out of 100, we are doing export. And around 80% of export goes to Europe. But now we are seeing a lot of European demand and European inquiries coming. Maybe in the next 2-3 years, Europe also will have a good share in our export. Europe market will have a good share in Menon Bearing export. Thank you.
Got it, sir. Got it. And in Europe also, like entirely we will be focusing on auto parts, right?
Yes, all are component: bimetal division, aluminium division, and brakes division.
Got it. That's
Thank
it
you.
from my side, sir. Thank you.
Thank you. We'll take the next question from Akshay Jawahar. Please go ahead.
Yeah, hi. Thank you for the opportunity. I just want to confirm the margin guidance. So for FY26, we've done 22%, and 27, 28, we're basically estimating that each year there'll be a minimum increase of at least 50 basis points, right?
Right.
Okay. Thank you.
So we will certain that.
Yes.
Not to worry.
Thank you. We'll take the next question from Himanshu Upadhyay. Please go ahead.
Yeah, hi, good afternoon.
Hi,
And
Himanshu.
congrats on good set of numbers. Yeah, hi. See, hello, am I audible?
Yeah, please go ahead.
Yeah, so one place which has still not done well for us has been Alcop. Okay, so in last 2-3 years, the expectation was this will grow at a much faster pace than our bearings business, because it is at a very nascent stage and a lot of new product deliveries were to happen and development. But if you look at 24, it was around 64-65 crores, and FY26 has shown some growth. But the way the business was expected to grow, it has been slower, and bearings has been the positive surprise for us. Okay, so bearings has done pretty well. So can you elaborate on what is the reason for that?
Last 2 years, if you say Alcop result, there has been growth, but not as exponential growth as Menon Bearings. But this year, like how we mentioned, we have developed parts in the aluminum segment for various OEMs and different customers. From if you see last quarter from January, you have seen there has been significant growth per monthly or quarterly growth in Alcop
You see,
also.
particularly if you refer to the fourth quarter of this year for aluminum, Menon Alcop is concerned, you can see there is a growth quarter on quarter to the extent of almost 25%, and we are assuming a growth in Alcop for the next 2 years at the rate of 29%.
Actually, because of the war, a lot of delays were happening. A lot of aluminum parts which we made were new engines. So last 3 months have been quite, what do you say, the export routes have been taking delays. Customers have last 6-8 months because of war and raw material prices increased on Donald Trump's tariffs. So the customers have been little bit slow. So when if our samples had to like be delivered on January, they were okay for March, because all customers could, like, we make small parts of one engine where customer requires around 800 parts from different customers. So that was taking a time, but last quarter and this quarter, what all parts we have been developed, we are seeing that come into production. And last quarter and this quarter also, you will see a much significant growth for Menon Alcop also. And the next 2 years, Menon Alcop will be contributing as much as Menon Bearing in the whole pie chart.
Okay. Okay. And in the bimetals, have we added many new customers because of which we are seeing so very good growth, or it is the existing customers and the very good growth what we have seen in
Yeah,
tractors
That
in
is
India?
that is a mix of both new customers as well as the existing customers, of whom the business has grown up substantially. And again, I repeat here that Alcop for next 2 years will grow at a rate of 29%. I am 100% sure, because most of the items have been samples have been already approved. We are just waiting in tranches. They will start issuing the orders so far as procurement is concerned. The only thing is that we are waiting for the orders now, and it will be completed over a period of 2 years. And as I told you that there is a pipeline, assured pipeline of 30 crores that can be completed within 2 years from now. As such, there will be a growth of, you see, I can tell you we can reach more than 120 crores in next 2 years, so far as Alcop is concerned.
And braking business, the dynamometer, has it settled down? And are the testing for the railways and MNCV which were pending, what is the progress there?
That is under production, and we'll be receiving it by the end of August, and thereafter we will take up the business not only of railways but OEM's business also will be in our fold. I am sure. We had a meeting today morning itself. So far as railway business is concerned, we are already tied up with them. They are already inspected. They are just waiting for the arrival of dynamometer. After that, we will get the registration and vendor code number, and we will start the business. May not be a large scale to start with, but slowly we can take up with railways as well as OEMs.
And any specific reason so much delay in dynamometer? Because I think it was to come last year
So you
still
see,
by August.
you see, we actually order this machine or testing machine for 2 other manufacturers, but unfortunately they could not complete because of certain reasons which cannot be explained here. But now that is in progress, and we are 100% sure that it will be completed by August.
See, dynamometer is not an easy testing equipment. It's very expensive, first of all, and there are very few players in India who do it. And what technical specification Menon brakes were demanding, few of the customers couldn't achieve it. So finally, we found a partner which is delivering the specifications which we want, which can do even high-end railway parts like Vande Bharat and the new age trains. We just didn't want, if we're investing so much money, we wanted to have a technology that can help us for the next 10 years. So a lot of back and forth with many companies and engineers and consultants. And finally, we reached on a party which is delivering our requirements, and that is coming in. At the same time, we've developed new parts in brakes. We entered the 2-wheeler segment, 3-wheeler segment. We are also submitted samples for OEMs, and the dynamometer also is coming in August. and we are also, like Mr. Aradhya said today, we had a very positive meeting with the railway segment. So that business also is looking forward. So brakes also has a good future lining up.
Thank you, sir.
Okay, thanks, sir.
Thank you. We'll take the next question from Pritesh Chheda. Please go ahead.
Yeah, hello, sir.
Hello.
Sir, on the bimetal bearing side, what is the dependence on CV and what is the dependence on tractors in our business line? If you could share that mix. And second is, these material cost increase, because I am assuming bimetal means copper will also be a part of the raw material. So, and there is a lot of inflation, this base metal. So how do we handle the bimetal bearing in terms of the growth next year and also the margin outlook considering the metal price being up?
Okay. There are two things that you firstly asked as to what are the segment-wise revenue. Percentage, tractor it is 35% of the total revenue, and HCV, LCV it is between 20 to 25%. Secondly,
What is then what is the balance? 25 and 35.
So brakes is 20%, transmission is 15%, and others, engineering goods and electricals, etc., that is 10%.
So brakes will then be a part of some auto, right?
No, brakes,
Braking systems.
braking system for braking system, not brake liners. This is a bimetal we are telling you.
Where bushes go, wherever rotation is there, but it goes in HCV, LCV. Brakes India gives to all segments. But as primary OEM, 35% is tractors, 25% is HCV, LCV, then 20% is brakes usage,
15% transmission.
15% transmission we give to Allison Transmission, Magna Transmission, and rest is 10% is electrical application and other industrial application where we give up products to. So that's the application pie chart.
So I'm assuming that this brakes and transmission, where you are secondary supplier, in turn goes to auto. So auto will be like 90%, right? And in that, if one has to look at in that 90%, how much is HCV and tractor? Will it be similar as you are a primary, in turn secondary also will come out to be a same breakup?
Similar breakup, I would say. Not same.
Okay, done.
Yeah.
Similar. Okay, no problem, sir.
Yeah.
Okay. So far as raw material is concerned, you can see raw material prices are not increasing now only. Since October, they have been increasing like anything, and we have already passed on that burden to the customers. We are having pre-decided formulas. RM indexing is there, raw material indexing is there, and accordingly we are passing on that burden to customers. Not to worry about the margin so far.
Just for a better understanding, before we used to have a delta. So 3 months the prices have increased, we bear it. The whole in 1.5 year is equal out. Some 3 months the customer bears it, some we bear it. But now as prices are more volatile and increasing significantly, every day the management, our marketing teams are having chats with the customer how we can reduce this delta from 3 months to per monthly basis, or how we can reduce the burden which is bear by the company even more. But whatever raw material increase happens, the customer bears it because we are supplying high-end technology parts to them, and we are their partners. If our products don't reach, their assembly lines stop. So they have a bigger cost if that happens. So customers and us, we have a very good relation. We work in tandem, and they give us raw material price increase. But as Menon Bearings, as management, we are trying to make this gap as small as possible.
Okay.
Yeah.
And the growth outlook in the bimetal bearing, considering FY26 was one of the best years for tractors and HCV.
So we could not get your question.
No, growth ह्या वर्षी चांगलं होतं. Growth this year also for Menon Bearing also has been significant. Next year alone also we are growing at 25%. 23% next year also. But like I would like to clarify one more thing. I've always said it in our investor meetings. Our top management or our company philosophy is growing sustainably. If you look for the last 10 years, 15 years, our EBITDA margins have remained the same. Our top line must have not grown so aggressively, but our profit margins and EBITDA margins have remained the same. So when we are talking about growth, our policy, our philosophy of our company is to have the same margins. So tomorrow when Mr. Aradhya says we'll reach 500, we are going to maintain similar EBITDA and profit margins. So we take different policy matters to grow sustainably. So we don't get greedy behind growth or top line or one customer, we get big business. So none of our customers has more than 15%.
As you said, we are not after volumes. We are balancing between volumes as well as margins, so that we are sustaining that over a period of time, and we will sustain it in future as well.
And none of our customers has more than 15% market share, like share of the company. So we are not dependent on one customer, or like you might say, like auto is a big margin. So we have a good diversification of tractor companies we give to, good diversification of import and export. So even if one cycle is down, we are not affected as a company as whole in a bigger picture. So we take care of all of that and take decisions accordingly.
Okay. So just one last question on LCOP. We are at 2,000 ton capacity, right?
That is actually 1450 tons capacity, but we are having another spare holding furnace, so we can double that capacity at any time, considering the
when volumes are there. When
considering the volumes and future that we will have to install that capacity as well and start production on that.
So more than 2,000 if required. Currently we are operating at 1,500.
So 1,500 tons per annum, right?
Yes.
1,500 tons per annum, and what is the utilization?
Utilization as of now is 65%, and it is likely to go up to 90% by the end of this year, so that we will have to engage another furnace next year.
Okay. Thank you very much, sir.
Yeah, and Mr. Chadda, I would like to if aluminum for at least Menon Alcop, don't try to calculate by tonnage, because if you see any of our competitors in the market, for basically I will say before price increase, aluminum was for 200 rupees a kilo. Average realization, if you see competitors, even big players,
500.
They do around 450. 500 is higher end. Average realization of value addition is 200 or 250 rupees more, where Alcop's average realization is 750, 700. So we are focusing on very critical and high value parts. So tonnage calculation won't give you correct. If you go try to reverse calculate, it won't give you. You won't come to our figures.
So what we are telling you that we are not after volumes. We are balancing both the games. You see, volumes to the certain extent, which can fetch us margins which are sustainable.
And even if you see in the aluminum division, big companies, I don't want to take my competitor's name, they are working at 6 and 8% margins, where in the aluminum division also we are working at around 20% margins. So that's the difference between Menon Alcop and other players in the market.
Okay.
Yeah, thank you.
Thank you, sir. We'll take the next question from Raghav Maheshwari. Please go ahead.
Hi, am I audible?
Yes.
Yeah, hi, sir. Thanks for the opportunity and congratulations on a great result and a great FY26. So, sir, first of all, I wanted to understand, like you mentioned repeatedly, that you were able to pass on the raw material price hikes to the customers, but just wanted to understand a little bit, what's going on in the industry. How much of the price hike were you able to see? Like, I know you have passed it on, but how much was the raw material inflation?
It was significantly high this year. Aluminum also, we use with different alloys and different grades technically, but some grades that cost 250, 240 rupees a kilo went to 280. Copper rate, everyone knows.
See, last month it was 1210, now it has reached to 1275, though it is fluctuating according to the geopolitical situation and market. So they are very volatile. We cannot say if it has gone up to 1275. Maybe in the next week it will go down to 1200 and 1215 as well.
But this price around 1 year back was 900 rupees. So if you see, there has been significant jump. But we have to buy. We do buying every month or quarterly. So these prices have been very volatile. But customers, because we are doing high value addition and our customers are OEMs, we are not doing any not, I don't want to say altu paltu, but all our customers are A grade customers. They also appreciate our effort and we have a very good relation for the last 30 years, and they support us for this price increase.
And any difficulty or challenges you are facing or you might face in sourcing the raw material apart from the price hike?
No,
Sourcing is not an issue. Pricing is the issue. But there are some logistic issues now because of the war. Logistic lines are taking little longer. So now because of that, we have to be proactive, be in touch with the our logistic partners more often, try to get the best routes. So from that end, we are spending more energy and time making sure all that happens on time. Where
But-
before the war, it was more smooth
that-
situation.
that is more or less true so far as exports are concerned. Most of the raw material required, we are procuring it domestically. So the war-like situation and geopolitical situation doesn't affect much so far our industries are concerned.
It affects
Except for
prices.
Alcoff, some imports we have to do.
Yeah.
So
Understood,
we have to take little more effort so far as certain material is concerned, but overall situation is normal for us.
Right.
Just
And so
because of war, we have to be more proactive and monitor the situation better.
understood, sir. That helps. And sir, in the last phone call, you said that exports, you're targeting almost 90 to 95% of exports. You want to bill it ex works. So, how far are we in that?
We are working, most of our export orders are getting converted to X works. Around 80% of our orders are X works. Remaining 20 we are in talks. So it's not very easy. Some customers are
Say they add what happens, when we are discussing and negotiating with such customers where our quantum of business is too high and where our terms are DDP, that is delivery duty paid. So we
Yeah.
are talking to them, but at the same time they are asking for reduction to the extent that we cannot afford. So instead of that, better we continue with the DDP terms. That is what is happening. But when like I am visiting USA next month, maybe Canada next month and USA month, then we will have talks to them and we'll see what best we can do. Whether it can be from 80% we can move it to 90%, let us see.
But majority of our exports still out of 100, 80% is X work. So that is still we are in a very good position where we are not letting a third party like a war or a third. So external factors affect our quality and delivery timings. So what
Right.
20% is left, we are still negotiating and trying our way how we can get X works.
And that is yet to reflect in the trade receivables.
Yes, yes.
Understood, sir. And sir, also second thing,
Raghav, may I request you to rejoin the queue, please? Because there are other participants who want to
sure,
ask
all right.
questions. Thank you. We'll take the next question from Murtaza, and I'd request the participants to limit their questions to two per participants.
Hi, sir. Good afternoon. Thank you for the opportunity and congratulations on a good set of numbers.
Yeah.
I had questions. Firstly, just continuing the previous participant, like what is the time lag we have in terms of passing on the cost? Is it a month or a quarter? How do we do it?
It's quarterly.
Yeah.
Okay, quarterly. And so secondly, earlier we had mentioned that we are trying to improve our asset turns to somewhere around 2 to 2.5. So, like, what sort of timeline and are we on track, and what are the key changes or steps we are taking in?
So we are right on track. You see, for the next 2 years, what I already told you that there is a growth of 25% envisaged year on year. With that, we will be able to, on overall consolidated basis, we should be able to reach asset turnover of 2. By 28, we should be reaching that 100%.
And you mean by efforts, we take efforts on daily basis. We are doing heavy
Daily monitoring.
daily monitoring. There is technology upgradation, training of our teams. So a lot of effort taken by the management to make sure that we are achieving these set of numbers.
I appreciate that effort. And lastly, just also wanted to understand earlier in last quarter con call regarding the PTFE bush opportunities for the EVs. We had sent some samples. So I just wanted to know, like, have we received the approvals? How has it been? Needed some commentary if you can.
You see, total inquiry for such PTFE bushes is for 7 parts. Out of that, one part they were initially asking us to provide the samples, which has been approved by the European country, and their vice president is visiting Pune office, Pune manufacturing facilities of that customer by 26th, where our marketing manager will visit them and we'll take it forward. And for once that approval that they have orally they have received the communication that the sample is approved. Now that vice president will put up another inquiry for remaining 6 parts so far as PTFE is concerned, and those all will be manufactured by us. Samples will be sent to European countries, and once that is approved, then maybe for so far as 1 lakh of bushes per month is concerned, we will be getting that order within a month or two. And for rest of the items, those samples will be sent to them, and we are likely to get that order to be productionized by the end of this year. And that quantum will be about 6 lakh of pieces per month.
And there is significant growth in the PTFE industry also. Like the newer age engines will be moving towards PTFE and new coatings and new technology. And last 3-4 years, Menon Bearings, we have as a team working very hard on this technology, and finally we have perfected it, I would say. So moving ahead, a lot of growth will be there in this segment because the newer age engines required this, and that's why, like Mr. Arade said, European companies are interested now, and we are submitting our samples. So in the next 2 years, you will see a growth in this PTFE market also. The last 3-4 years of R&D and research in PTFE is benefiting us now.
Sure, sure. Thank you very much. Just one final question. I guess earlier in the investor presentation, we were exporting South Africa via a Dubai distributor. So I just wanted to know, because of the disruption of the West Asia war, so have we changed our path to it, and how are we planning or doing it?
No, we still are doing export through Middle East only, because we had past bad experience directly working in Africa during payment conditions and all. So this merchant exporter gives advance payment which goes to Africa. So now the time period is longer. The consignments are going, before it went 3 times a month, is going once a month because of congestion in the Dubai ports and Middle East ports. But work is happening through Middle East only. We want to be safe. We don't want to our material. We have certain payment terms and conditions which we are focusing on, and we don't deviate from that.
I think you are targeting the question is actually the material that we are sending to African countries through Dubai. Is that question? Huh?
Yes, yes.
So what has happened so far as Dubai is concerned? The exports to African countries through Dubai. For last 3 months, we are that export is halted. That has affected to the extent of almost 2 crores of business that we have lost during last 3 months. However, at the same time, that has been compensated by customer for African countries. We have got orders of almost 6 crores of rupees for 6 crores of rupees for the entire year. And here the merchant exporter is lifting the material from us and sending directly to African countries. And from the merchant exporter, we are getting the payment in advance. So overall, there is no impact on our sales or volumes as such.
Sure, sure, sir. Thank you very much. All the best for the future. Thank you.
Thank you. We'll take the next question from Ajay Sharma. Please go ahead.
Yeah, I just want to check for Alcop. You have mentioned that almost 50 to 60 crore revenue will come from just one single customer. Is that correct?
Not one single customer. There's John Deere, there's Honeywell, there's Taco Prestolite, there's Eaton. There are many customers, but we developed a lot of export parts. Like when I say John Deere, there's John Deere plant in Mexico, there's a John Deere plant in USA, there's a John Deere plant in Europe. So it's not one plant, and that one plant does 2,000 crore turnover. So if you see like that, there are 10 different customers which we are developing parts for. So the next 2 years growth, there are different segments. So John Deere is one of the larger players, but we are developing parts for Honeywell, Concentric, Taco Prestolite.
What I in the initial speech, what I told you, that I will repeat it again. New development parts pipeline is robust with 51 new parts across major customers like John Deere for domestic as well as for exports. Then Eaton, Taco Prestolite and Maegawa, representing a business value of more than 29.69 crores so far as aluminium business is concerned, and that all will be productionized in this year as well as some part of it will be in the next year. So overall 30 crores business pipeline in Alcop is pending and will be completed during these 2 years. Okay?
Yeah, got it. And for bimetal, I guess you're targeting 23% growth, right? And so
Yes.
where is the additional growth coming from? Is it coming
There
from?
are there are so many customers and pipeline is very large, you see. So entire page is there, almost more than 28 to 30 customers are in pipeline. We have issued RFQs, not only issued RFQs, some of the commercials have been already finalized, some of the samples have been already sent, some of the samples have been already approved, and we are getting orders from them one by one. And during next 2 years, including this year, I hope that the new addition into bimetal business will be more than 50 crores.
Like Mr. Arabe said, today's meeting that happened for new business, that business will get actualized after 2.5 years. So what growth we are seeing today is last 2 years ka effort. So today what new business we looking at, because it's an engineering and very technical product, there's a lot of time that goes in developing the parts, then testing, validation, then they have to get all the new engine parts from all their suppliers, then 6 months testing, then they start business in a small way. If the order is 10,000 pieces, first month they don't do 10,000 pieces, they start with 2,000 pieces, then 4,000, then 8,000, so the quantity increases. So it takes a little bit more time. So in the bimetal bearing, it takes around 9 months from start to order. Maybe in the aluminum division, it takes little longer time, around 12 to 14 months from start, from the day we get RFQ till the start of business happens. And these external factors like the war and etc. doesn't help in the situation.
Okay, thank you very much.
Thank you.
Thank you. We'll take the next question from Divyansh Gupta. Please go ahead.
Hi, I just have one question. In the revenue split that we have given, right? So there is OEM replacement and OEM aftermarket and exports. But there is also another line, others. So what is this others?
That is industrial. Industrial generators, compressors, fans, coolers, etc.
A lot of air conditioning, our bushes go for a lot of air conditioning applications.
Got it.
Air conditioner, industrial fridge, those go in hotel industry.
Then compressors, generators.
Yeah.
But how do we see the growth of this segment? Because let's say now with all the power demand, both on consumer side and on industrial side.
You see, we are already issued RFQs from compressor division like Maekawa. They are into Japanese company. They are into compressors. Similarly, we have got inquiries from Mahindra for their generator sets, and that will be completed within this year itself.
So from the auto segment also, we are looking at other options to diversify and grow also. Like how real estate boom is happening in India, everywhere electricity is required. Almost all buildings, restaurant need a generator. So this growth is going to get bigger and bigger in the future. So we are looking at different companies, different applications where we can help and support.
And apart from that, we are already supplying to PSA like that. You said Mr. Aditya told you regarding air conditioning. That is a huge business we are receiving, and it is increasing every month. That is increasing. Apart from that, so many compressors and generator sets we are receiving the inquiries. Like we are already into Cummins, then into Mahindra, then other Maekawa is also there so far as compressors are concerned, and those inquiries are being floated to us, and we'll take care of.
Got it. And this 10% revenue in this 11-12% mota in this quarter.
What happens, when this revenue also goes up, at the same time, domestic and export is also goes up. So that it remains
the pie chart stays same. If you see our pie chart for last 10 years is similar, but now we have reached 300 crores, but the others also remain similar percentage.
Got it.
When you see the pie chart, our aftermarket is almost stagnant, 8% over last 4 to 5 years. But the business has gone up from 10 crores to now 16 crores over last 4 years.
And we are targeting even more.
Pie will remain same.
Yeah.
The overall pie is going up. So that's why. So the question that I had follow up is that this, let's say 8% or 9% for this year, this is completely in bimetals business or it's also split across?
No, that is so far as
bimetal. In aluminum division, we don't have any aftermarket.
No, I meant for this others business.
Other business, that is so far as bimetal is concerned.
Correct. Yes.
Got it.
Thank you. Sir, we'll take up questions from the chat. Sukanya Tripathi has a few questions. First of all, what's our current order book? And what size of orders are we looking to close over the next 3 to 6 months?
You see, our current order book position is more than 32 crores. Out of that, we'll be serving almost more than between 30 to 31 crores on a consolidated basis. Going forward, what we feel that we'll be targeting almost 190 crores for first 6 months.
Okay. Her next question is, what would be the industry mix in this product mix?
Sorry?
Industry
What
mix.
will be the industry mix? And how much would be auto, how much aerospace, how much railways?
See, all the three divisions have different application. Like bimetal, like we mentioned before, tractor is 35%, 25% is LCV. एक मिनट.
Sir, she is specifically asking regarding the order book. So how much will be auto, how much aerospace, and how much railways and earth moving?
Truly speaking, we are not bifurcating order book position into auto and SUV, LCV, and
once
all this.
Sale happens, then only we consider it.
But overall, Mr. Aditya will tell how much will be the auto, what will be the home applications, what is the pipeline business, tractor business. He will let you know accordingly, and it will remain more or less constant. Okay.
Roughly, I'll give you an idea about our order book. Out of 100% of our order book, around 60% is export, 40% is domestic. So you can get a better understanding on that. 60% export, 40% domestic. Majority of it is from the auto industry. We are doing like tractor, we are doing HCV, LCV, and a lot of transmission work. So that is one. We are also doing around 10% of the new order book is from EV. Like we mentioned, we are giving parts to Tesla Motors, to Porsche e-mobility. Now we entered Tata Motors for Tata electric vehicle parts. So we entered this as a new client to Taco Presto Light 2 years ago. We were only doing 2 parts with them. Now we do more than 4 parts with them. We've gotten more 4 RFQs with them. So in the near future, even the EV presence of Menon Alcohol will increase. So this is like a basic. Once railway start, we're doing zero business till now for railway. So we are finished our registration with railway. Railway people visited our plant for audits. So in the near future, even railway business will start from like 5%, 10%. But we are looking for railway business in the future also to increase.
Overall, on consolidated basis, auto will be 75% and 25% will be rest.
Yes.
On a consolidated basis.
Okay, sir. He further asks, you had earlier guided for 350 crore revenues in FY27. Are we maintaining the same, or is there a material upside to this number?
What I feel that we should be exceeding that target.
I just want to say now we are with Kaptify also for the last 3-4 years. 2 years ago, we had submitted, I don't know who all are following the company for a long time. We had given a figure of 275 for this year that we are going to achieve. And
which was subsequently revised to 290
crores. Our management, everything working together, we have exceeded the number by 25 crore. So if number is 350, I am pretty confident, and Mr. Aradhe was saying we will surpass that number. But how much, that we have to see next year, but we will be surpassing that number also.
Precisely what we estimated is more than 360 crores.
Yes.
Okay, sir. And her last question is, I understand that we'll maintain EBITDA margins about 20% now. However, we did 25% in Q4. So suffice to say that depending on the export mix in that quarter, our profitability number may move in a range of 22 to 25%. Is that correct, sir?
Yeah, that is correct. Depending on what kind of high volume products come.
You see, sometimes what happens that raw material goes up and we can pass on that burden in the next quarter. In the meantime, we have to sustain that burden, and maybe temporarily it can come down and subsequently it can go up again. But overall, we can tell that we will be able to sustain EBITDA margins to the extent of 20% to 22% overall for the entire year on a safer side or on a conservative side.
If the environment, the third external factors are in our favor, it should be higher.
You see, electricity is going up, labor cost is going up, new labor code has been implemented. All these cost needs to be considered while calculating the EBITDA margin, so that on a conservative basis we can say we can sustain that between 20 to 22%.
Thank you, sir. We'll take the next question from Manas Jain. Please go ahead.
Hello. Coming to the same question of EBITDA margin, I just wanted to understand this quarter is purely, there's no one-off. If just pure operating leverage coming out, just for academic purpose.
So that is, you see, our production capacity is something. During the previous quarters, you will see the utilization. Utilization was about 60 to 70%, or maybe about 75%. Now we have achieved the production targets and capacity utilization to the extent of 85% in bimetal. In aluminium, we in capacity utilization gone up from 45 to 60. Similarly, in brakes also, we increase the capacity by almost 1 lakh of pieces per month, and that capacity utilization also has gone up. What happens, when the production capacity utilization goes up, the productivity is increased. The expenses related, variable expenses to some extent increase, but the fixed costs remain the same. So the total cost of production goes down, and because of that, we get sustained margins, or overall margins are increased.
Right.
So overall, when the production volumes are high, sales volume is high, then we can have better margins as compared to the corresponding period of last year or previous month.
Got it. So it's operating leverage basically kicking.
Yes,
It's operating leverage.
of
Yes.
course.
It's operating leverage, but all different parameters.
Now, I explained as to how we achieve that.
Yeah.
Okay, perfect. Thank you.
Thank you. Sir, since that was the last question, would you like to give any closing comments?
So in conclusion, Menon Bearings is entering the new financial year with strong momentum, a healthy order book, and a solid financial foundation. We remain committed to delivering sustainable value to our stakeholders, shareholders, and I thank you for both the promoters to be present in the meeting and guiding you people, as well as imparting the information. They have got their expert opinion so far as the performance of the company is there, and overall, I am sure with support of all of you, by the grace of God, whatever we have decided to grow at the rate of 25%, and our optimistic target, if something doesn't go wrong, we should be able to reach 500 crores. And with this, I thank you once again for participating in the meeting, and then asking us some leading questions, so that we can think upon that. Wherever improvements are required, we will definitely improve. And in the next meeting, whatever the questions you have left, those will be answered in the next meeting. Thank you very much. Have a good day.
Thank you. Thank you so much.
Thank you. Thank you to the management team, and thank you to all the participants for joining on this call. This brings us to the end of this conference call. Thank you.
Thank you. Bye-bye.